Hello and welcome back. That was a pretty amazing 2 sessions this morning, and now we are going to learn about income from different developer platforms from Amy Karipidis. I hope I pronounced that right. Amy is amazing. She is an accountant, and I personally vouch for Amy because I never in my wildest dreams thought that there was an accountant out there that would screen share with me to make sure I was filling out the right tax forms on Steam. She's incredible, so I'm going to hand it over to her. Welcome, Amy.
Thank you very much, Caitlin, and hi everyone. I hope you're enjoying your WA Games Week. It's been a big few days, I'm sure. So I'm Amy. I'm from LDB Accountants. We're an accounting group over in Melbourne. We look after probably about 60 studios in the game dev industry, from startups all the way to mature studios, all around Australia. So as Caitlin mentioned, we look after her over there in WA, some clients in South Australia, Queensland, and even up in Sydney. So look, we don't specialise in games specifically. We are a full service accounting firm, but we do have a lot of clients in the industry, so we are quite knowledgeable about what goes on and the types of arrangements and types of transactions that we see from day to day in the industry. So off the back of that, we do get a lot of queries from our game dev clients in relation to a number of topics, but one that does come up quite a lot is GST. GST can be quite confusing for accountants as well as game developers. One thing that has happened more recently in the last 5 years is there was a bit of a change to the GST legislation and how it interacts with digital products. So that's what this presentation came about from, because we've hopefully deep dive into that and sort of understand who's remitting GST, who's responsible for it based on the different development platforms. So this is a specific presentation. We are going to cover just the GST element, and we are going to look at income when you're receiving income from these top 6 platforms, essentially, who's responsible for remitting GST and when. We do want to caveat that by saying we are just working off the basic agreements that are quite common at the moment. The larger the business is, the more they may have a slightly different agreement, or you might have agreed slightly different terms. So we are just working off the basic terms just to give you an idea. As with anything in this scenario, we always recommend go speak to your accountant, go speak to a lawyer whenever you are going to sign up to one of these development platforms, just to make sure you understand your roles and responsibilities and who's responsible for what and when. So we're going to cover off the 6 main platforms today, which is Steam, Google, Apple, Nintendo, Microsoft, and Sony, and we'll go from there. So as mentioned, the session overview. So today's session will cover a general overview of GST, what it is, and how does it apply to digital products. We'll then expand on this by going through some of the examples of transactions using those various platforms that I mentioned earlier. So we are only going to cover those 6, but hopefully you'll get something. So just generally, what is GST? So GST is a broad-based tax of 10% on most goods and services or items that are sold or consumed within Australia. So most businesses within Australia are registered for GST, which means that they need to include GST in the price when they charge for their goods and their services. So on the flip side of that, they'll also be able to claim GST credits included in the price of goods and services that they buy for use within their business. So generally, goods and services provided or purchased by an overseas or international company do not attract GST, and instead they're usually considered a GST-free supply. So recently we've had a lot of growth, obviously, in the digital economy, and the government had become aware of some increasing number of transactions that were occurring in the online space that potentially maybe the GST laws weren't capturing. So with the more amounts of money coming into Australia from international parties, they realised they were missing out on their share of the GST. So about 5 years ago, they brought in some new legislation, which was commonly referred to, or you might have heard of, is the Netflix tax. So as a result of the Netflix tax, GST is now included on all digital products and services that are consumed or provided to an Australian customer. So you might have noticed that kind of includes things such as websites like eBay or Amazon, they're now required to charge GST when you're an Australian customer. So it will ask you where you're based, and it will put GST on the price when you purchase something from there. So these changes went beyond the exchange of physical goods, and now it also applies to the provision of digital streaming services. So your Netflix, hence the Netflix tax, Spotify, iTunes, Adobe, all those sorts of things. So previously, the large multinationals have their headquarters overseas, so they weren't required to charge GST. Now they are, and it obviously then changed the scope of what we're looking at, and that's the digital platforms through Steam, PlayStation, and Xbox, etc. So the impact of these changes was quite broad, and it did cover off a whole bunch of digital products. So it included movie downloads, apps, subscription services, music services, and of course, online gaming services. And this is just an example of how far it went. So when we're looking at who charges GST, the first question that needs to be asked is, does GST even apply to my transaction? So on the basis that GST does apply to a transaction in question, there is a need to determine who bears that responsibility of remitting that GST to the Australian tax office. So with this in mind, the ATO provided some commentary about 5 years ago when this came in on general guidelines surrounding the sales of digital products. So if you make a sale to an end user, either directly or via what we call an agent, you will be considered the merchant for GST purposes. So in this circumstance, as you are the party selling directly to the end user, who's the one consuming the game, you're required to remit the 10% GST on that sale to the ATO. On the other hand, if the sale is made through what we call an electronic distribution platform, or also referred to as an EDP, the EDP is the one that's responsible for collecting and remitting the GST on the sale. So it's important to note that whilst you might be an agent or you might be an EDP, you might also enter into an agreement where you're assigning responsibility for GST to one of the particular parties. So that can also happen, and it does happen in some of these contracts as well, which is important as to why you need to read the agreements that you have, and you also need to seek accounting or legal advice just to make sure you're doing the right thing and you're covering off on what you need to. So the first one we're going to have a look at is Steam, and essentially the main crux of this is, depending on the type of agreement that you have, you may be in an agency relationship with an EDP, or you may have licensed your game, to an EDP. The specifics of your agreement will impact how and who is required to account for that GST. So we're going to go through the examples, a couple of the examples now. They can be quite similar, but they are quite different as well. For the purposes of these examples, though, we are just using fake figures. We're assuming that across all platforms, you are going to pay some sort of commission, and that's going to be around about 30%. And that's purely a figure. Most agreements are around that, but some might be different. Some platforms have a particular threshold where you actually pay a lower commission if you're a small business, etc. But this is just an example, okay? The most important part to take from this is who's responsible for the GST, as opposed to what the commission value actually is, okay? We've also sort of tried to split it between worldwide sales and Australian sales, so you can kind of get an idea of how that would look as well. So the first diagram I have up here is Steam. So basically, under the standard Steam agreement, the developer, which is you grant what we call a license to Steam to sell your game via the Steam platform. Valve sells the game directly to the end users, both within Australia and around the world. And in that situation, Valve is the one that will collect all the revenue from the sales, and they will remit all the applicable sales taxes, so the GST, to each of the authorities. So Valve will then pay you back a share of the net revenue, which is what we refer to as a revenue share agreement. So Valve collects the money from the end user, both in Australia and anywhere else in the world. They then remit the GST on that sale to the ATO, and then they'll pay you back your share of that revenue per the agreement. So this slide effectively just covers off on what we've just mentioned. So there's two transactions to this arrangement. So the first transaction is the sale of the game to the end user by Valve, In this situation, Valve has been granted a license to sell the game. Therefore, they're considered an EDP. As they're an EDP, or an electronic distribution platform, Valve are the ones that are responsible for collecting and remitting GST on the sales to end users. The second transaction is the revenue share agreement between yourself as the developer and Valve. Valve in this situation is the one that is engaging the end user, so they remit the GST. They then take their commission for their service, which is usually a percentage of the sales, and in this case 30%. As Valve is based overseas, the revenue share transaction, so the second part of this, the transaction from Valve back to the developer, is between an Australian company, yourself, and Valve, which is a US company. In that situation, no GST applies. So you as the developer have no GST obligation to remit. So what we've done is we're going to summarize this in a table with a couple of figures as well, and we're going to do this for each example as well. So first question is GST payable on the Australian sales? And yes, because it's essentially payable all the time, just depends who pays it. And who is responsible for remitting GST? So in this case, it's Valve. So on the slide, you can see an example. So we're just taking $102 as the gross sales from all users, Australian and worldwide. So in this situation, we're saying that $22 of Australian sales or relate to Australian users, and $80 are foreign or worldwide, anywhere else in the world. So in this situation, Valve collects the $102 from all the sales, from sales on the platform, and they remit the $2 GST, which is 1/11 of the Australian sales, being $22. They'll remit that direct to the ATO for you. In that situation, that represents transaction 1. After the GST has been remitted, Valve is left with $100 of sales. They will then take their commission, which we're assuming is just a flat 30% in this case, and then they will pay you the remainder, 70% or $70 as a revenue share payment. That revenue share payment of $70 is all the developer will receive. So the developer receives $70 direct from Valve as a revenue share. In this case, no GST is applicable because Valve is based in the US. They're paying an Australian company $70 as a revenue share, and no GST is applicable on that part. So in this situation, the developer would receive $70 and have no GST included. Google. So Google works a little bit differently to Steam. So with Google, Google is appointed as your agent and they sell the game to the end user. Google then collects all the receipts from sales on your behalf and charges a transaction fee for their service. The cash the developer receives from Google is the sale price less the transaction fee. GST is then charged on the amount received by the developer. As such, you as the developer are the one required to remit any applicable GST to the ATO. Again, this slide just covers off on the diagram, more for reference at a later point. So what are the GST implications here? So effectively, there are 2 transactions again. So the first transaction is the sale of the game to the end user by Google. So in this situation, Google has been appointed your agent, and therefore they are considered to be selling the game on your behalf. Due to this, as a developer, you are seen to be providing the sale, and therefore you are the one responsible for collecting and remitting GST on the sales to Australian end users. The second transaction consists of Google transferring the sale proceeds to you net of their fees. So again, to summarise, is GST payable on the Australian sales? And the answer is yes. And who is responsible for remitting the GST? So in this case, it's the developer who is responsible. So technically speaking, you as the developer are the one making the sale to the end user. Therefore, in the eyes of the law, you're the one that is collecting that $102. Practically speaking, due to the agency relationship, Google will collect the physical cash for you on your behalf, and they will pay your relevant share of the net income, net of their transaction fee. So in the situation where there's $102 of gross sales, they will collect that for you. You would be required to remit 1/11 of the Australian sales, being $2. And then after that GST has been remitted to the ATO, the developer will retain cash of $70. which is the amount that Google will transfer you. So in this situation, it is the developer that remits the GST. However, Google will do all the calculation, all the collecting, and they will pay you that $72 so that you have your $70 share and your $2 of GST that you need to pay the ATO. So it's a bit of a different way of looking at it, and legally this is the way the agreement is worded. However, practically speaking, Google will collect everything and give you $72, and you give $2 to the ATO and retain your $70. It's just a little bit different in practice. So Apple, again, is slightly different to the other two. So Apple, you deal with two companies. So you're dealing with Apple Inc., who are based in the US, and you're also dealing with Apple Australia, who's based within Australia. So this diagram is a bit crazy, a little bit bigger than the other two. So what we're going to do is have a look at the standard agreement. So the standard agreement with Apple, the developer engages Apple to act as their agent to sell the game. So you're actually engaging two companies. So Apple Australia sells the game to Australian end users. So you can see that's the middle part of the diagram. And then Apple Inc. is engaged to sell to anyone who's based in the US, to anyone else in the world. So worldwide users is what we refer to, and Apple US is the responsible entity for that sale. So normally under an agency relationship, the developer would be required to remit any applicable sales taxes to the relevant authorities, which would mean the developer is. However, in this situation, under the terms of the agreement, Apple Australia actually agrees separately to remit the GST on your behalf. So again, it's a little bit different because there's a particular clause in those agreements that allow them to do that, that you agree to. So likewise, with Apple Australia remitting the GST for Australian sales, the Apple overseas in the US will remit any other applicable sales taxes worldwide. So in any other jurisdiction, if there's US sales taxes or that or anything like that, they'll remit that on your behalf as well. The second part of the transaction with Apple here is the revenue share between the developer and Apple. So Apple collects the gross sales from all end users after deducting and remitting any sales taxes either from the Australian end users or the worldwide end users. They deduct a commission for their service, and then they pay the developer the remainder of the cash. So Apple issues what we call a recipient-created tax invoice and sends this on to the developer for the commission portion. Apple Inc. and Apple Australia will each issue a separate recipient-created tax invoice for their portion of the sales, or their portion of the commission based on the sales. So as this constitutes a separate transaction between the developer and Apple Australia, the revenue share between the two parties, or the commission payment between the two parties, will attract GST. The reason for this is they're two GST registered entities operating in Australia. So you've got your developer, who's a private company in Australia, and Apple Australia, who is a company listed in Australia and registered for GST. In this situation, it is the developer's responsibility to remit GST on the amount of that recipient created tax invoice, which relates to just the commission portion, not the full sales. So for Apple, we might skip over this and go straight to the example because I think it makes a little bit more sense having a look at the figures. So again, due to the nature of the complex arrangements with Apple, we'll summarise both transactions being the sale of the game to the end user and the revenue shared separately. So transaction one is the sale of the game from Apple Inc. or Apple Australia to the end user. And is GST payable on that? Yes, it certainly is. And who is responsible for remitting GST? So in this case, as there is a specific agreement in place, Apple Australia is responsible for remitting the GST on your behalf. In regard to transaction two, the revenue share with Apple, is GST payable on this? Yes, it is, because you've got two registered companies, Apple Australia and the developer, you. And who is responsible for remitting the GST on that income? In this situation, it's the developer, because the developer is receiving the money from a private Australian company registered for GST. So using the gross sales example of $102, which is made up of $22 of Australian sales and $80 of foreign sales, You can see that Apple Australia is responsible for remitting the $2 of GST, which is collected on the Australian sales to the ATO. So they collect $102 from all the users, they remit $2 of GST to the ATO, and they're left with $100 in their pocket. Apple will then take their overall commission of 30%, again, just a figure, from those net sales. They'll retain that and pay you the balance of $70. In this case, the 70% or $70 is paid across to the developer by Apple Australia and by Apple Inc. in their respective portions. So it means you're receiving a 70% cut of your Australian sales and a 70% cut of your foreign sales. The portion that relates to Australian revenue, or the commission on Australian revenue, does attract GST, and that is what you are required as a developer to remit to the ATO. So in this case, we're looking at $14 of Australian sales, which is 70% of what they've collected, and you would be required to remit 1/11 of that to the ATO, which would be around about $1 in this situation. So Nintendo. So I swear these diagrams get more complex as we go on. With Nintendo. So Nintendo, the developer engages Nintendo Co. Japan to act as their agent. Nintendo Co. Japan then appoints one of its subsidiaries as what we call a sub-agent to remit the gross sales, to distribute the game in their respective regions. So it might be Nintendo Australia will be responsible for sales for Australian sales, and then there'll be Nintendo in other countries or other jurisdictions that will deal with other parts or regions of the world. So in this case, we've just called it Nintendo Other, because there's various ones depending on what you're looking at. So once Nintendo Co. Japan appoints a sub-agent, the sub-agent then remits the gross, collects all the sales on their behalf and remits the gross sales back to Nintendo Co. Japan. Nintendo Co. Japan then remits any GST that's applicable on your behalf across to the ATO. And then finally, Nintendo Co. Japan pays the developer the gross sales less their commission and applicable sales taxes. So again, it's Nintendo Co. Japan who are remitting the GST, not the developer. The developer is receiving one lot of commission from an overseas entity, therefore GST doesn't apply to what the developer receives. Again, this is just a summary of it. So once again, we have two separate transactions to the arrangement. So the first transaction is the sale of the game to the end user by the Nintendo sub-agent. So in this situation, the relevant Nintendo entity has been appointed as your agent and is therefore selling the game on your behalf. Normally in this case, if it's an agency relationship, you as the developer are the one that's been seen to be providing that sale, and you're therefore responsible for collecting the GST and remitting it, GST on sales to end users in Australia. But under the standard agreement, Nintendo Co. Japan has agreed to remit any applicable GST on your behalf. So just by nature of using the word agent relationship, it doesn't mean the developer still has to remit the GST, because there sometimes can be further clauses in the agreement, like in the Nintendo one, where they actually agree to do it on your behalf. And a lot of the time you will see these companies will do that because they receive all that information. It's easier for them to collate that information and understand where sales have come from worldwide, rather than you trying to sort it out for every game and every platform. So in this situation, the Nintendo agreement actually states that the Nintendo Co. Japan will remit the GST on your behalf on the sales to the end user. The second transaction is between Nintendo Co. Japan, and that's them transferring you the sales of the game, less their commission, and less the relevant sales taxes that they factor in. To summarise, so is GST payable on Australian sales? So yeah, absolutely. And who is responsible for remitting the GST? So again, in this case, it's Nintendo. So what we've tried to do on the slide here is to show how it works in technically under the agreement. So on the slide, you can see that the total gross sales worldwide that we're using is our $102. In this case, $22 relates to Australian end users, and it is Nintendo that is going to remit those $2 to the ATO. After the GST has been remitted, Nintendo will take a commission of 30% and pay the developer the remaining 70% share. So technically speaking, because of that agency relationship, you as the developer are the one making the sale to the end user. Therefore, you should be collecting it, the $102. Practically speaking, though, that doesn't happen. Nintendo collects all the physical cash on your behalf, and they pay you the relevant share of your agreed commission. So whilst the physical cash that the developer receives from Nintendo is just the $70, which is the sales of $102 less the $2 GST less their 30% share, we've stepped it out like this on the slide because it's really the developer's responsibility. It's just that Nintendo is taking that under the terms of the agreement. So technically speaking, in the developer's accounting records, they need to be including $100 of gross sales, less $2 of GST, less a 30% commission fee, which gets them the amount they receive. So it's just practically and technically, things look a little bit different with what's happening. And Microsoft is the next one up. So with Microsoft, similar kind of thing to Nintendo. The developer engages Microsoft in the US to act as their agent. Microsoft in the US then appoints its relevant subsidiaries as sub-agents. In this case, we're looking at Microsoft Australia. Microsoft Australia then sells the game to end users within Australia. And Microsoft Australia is then remitting the applicable GST to the ATO on your behalf. The sub-agent, being Microsoft Australia, then transfers the gross sales less the GST back to the head agent, Microsoft over the US. And then Microsoft in the US then pays the developer the gross sales less their commission and any applicable sales taxes, being GST, and everything else worldwide. So as you can see, this one is a little bit different again, but kind of similar. Basically, Microsoft Australia is dealing with the end user, and they're the ones that are paying the ATO the GST liability, and then they're remitting the net amount back to Microsoft over the US. Microsoft in the US is then transacting with the developer, and that one transaction is the second part of this transaction. So once again, there's the two transactions. So the first transaction is the sale of the game to the end user by the Microsoft sub-agent. So in this situation, the relevant Microsoft entity has been appointed as your agent and is therefore selling the game on your behalf. But again, in this circumstance, you as the developer is seen to be making the sale, and you're responsible for collecting GST because it's an agency relationship. But again, in this situation, Microsoft has agreed to remit any applicable GST on your behalf. So again, the agency word kind of makes it a bit more complex because an agency relationship means it's the developer's responsibility. However, a lot of these platforms have in their standard terms that they'll remit it on your behalf, even though it's your responsibility. So in this case, Microsoft does agree in their terms and conditions that they'll remit the GST on your behalf. The second transaction is Microsoft in the US, transferring you the gross sales, less their portion, their commission, and less the relevant sales tax. Now, in that situation, the transaction 2 that comes back to you, so the net amount of the sales, that's between a US entity and an Australian entity, so no GST applies to that transaction. So again, is GST payable on Australian sales? Yes, it certainly is. And who is responsible for remitting the GST? So in this case, it is Microsoft, not by way of the agency relationship, but by way of the clause that they're taking responsibility. So on this slide again, you can see that the total gross sales worldwide are about $102, with $22 relating to our Australian end users. Microsoft will remit $2 across to the ATO on your behalf, And after the GST has been remitted, they'll take their cut of 30% and pay the developer the net revenue, being your 70% share, or $70 in this case. So technically speaking, again, the developer is the one making the sale. Therefore, we have included it on the developer side in the slide. However, practically speaking, Microsoft collects all the physical cash for you. They make the payment to the ATO, they take out their commission, and you receive $70 in your bank account. So whilst the physical cash being transferred to you is $70, we've stepped it out in the table to show that really Microsoft is just legally generating their $30 and you are referring to your $70 share in those steps. So now we move on to Sony, and that's our final one to have a look at. So under the standard agreement with Sony, the developer, which is you, grants a license to Sony to sell your game via the PlayStation Store. So Sony sells the game directly to end users both within Australia and worldwide. Sony will collect all revenues from the sales and will remit any applicable sales taxes to the relevant authorities in each jurisdiction. Sony will then pay you a share of the net revenue, which is often referred to as a revenue share. So again, there's two separate transactions to this arrangement. So the first transaction is the sale of the game to the end user by Sony. In this situation, Sony has been granted a license to sell the game and they're considered an EDP, electronic distribution platform. As the EDP, Sony are the ones that are responsible for collecting and remitting GST on sales to the Australian end users. The second transaction is the revenue share arrangement between you and Sony. So Sony is the one engaging the end user, therefore they will collect and all the sale proceeds from the sales. Sony will then take their commission or fee for their service, which is usually a percentage of the revenue, and transfer you the balance of the funds. As Sony is based overseas, the revenue share transaction between the developer and Sony is considered an export sale for GST purposes. Therefore, no GST applies to that revenue transaction that the developer received. Again, so it's a GST payable in Australian sales, yes. And who is responsible for remitting those GST? In this case, it's Sony, as they are an EDP. So on this slide, you can see Sony is the one on the Sony side. We're collecting the $102. Sony is remitting the $2 of GST on the Australian sales, being 1/11 of them. And then they're taking their cut of 30%, and they're giving the developer $70 of net revenue share. That net revenue share is transaction 2, and that's what the developer receives. So in the hands of the developer, there are no sales to any end users, and the developer simply only receives the $70 of revenue share income. The agreement here is between the game developer and Sony and not the end user, which means no GST is applicable when you're dealing directly with an overseas entity rather than the end user. So that really concludes what I wanted to talk to you about in terms of examples. I know I've just thrown a lot of information at you and a lot of tables and things, but these diagrams and these little tables can be helpful going forward as a bit of a reference guide. So we're happy to circulate the slides to anyone who would like a copy. If anyone has any questions, I'm happy to answer a few questions as well. Yeah.
Thank you so much. I was even sitting there taking notes. We do have a few people that have sent through questions, so I will read them out by which ones have been upvoted the highest. For devs who are not registered for GST, due to being under the turnover threshold, would you need to chase up with the platforms, and do you recommend registering?
Yeah, so quite often most devs will be registered for GST even if they don't meet the threshold. You can voluntarily register for GST when the turnover is under $75,000. Quite often companies will, because they'll be able to claim back GST on contractor payments and expenses that they've incurred. So quite often you will voluntarily register. When you do sign up to any of these platforms, though, they will ask your GST status, and that may affect things.
So good. Hope that helps because that was upvoted a lot. Lots of people requested that question. Got one that says, thanks for the GST info. Are there any little known insights into tax implications interfaces read the 30% digital games tax offset for indie devs and small studios?
Yes. So I think I understand the question.
If you want, I can give you a bit more context. There's a lot of studios in West Australia. Majority of the studios probably aren't hitting the threshold for the DGTO thing. So with that in mind, feel free to answer.
Yeah, so GST is very obviously separate. It's a sales tax, so it's the tax on an end good or product that's going out, digital products that's going out. So anything that you are looking at, whether it's terms of anything in terms of like DGTO or anything like that, you're always looking at net expenses and you're looking at net income. So GST is essentially taken out of the equation, and you're looking at anything net of GST when you're looking at those sort of offsets. With regard to the DGTO, that is generally speaking in regard to expenditure side, so it doesn't relate to the sales side. So what we've kind of covered today is really just revenue and sales. So DGTO is on the expenditure and what qualifies as qualifying expenditure for DGTO. I'm not sure if I've really answered that, or if you wanted to there's a follow-up question that might cover that a bit better.
I've still got Slido open, so if there is a follow-up question, I will see it. Feel free to send it through.
No worries.
The next question. This is about an ebook, but on Amazon, so if it's related. So if Amazon sells my ebooks uploaded by my Australian legal entity to an Australian reader, they're still responsible for the GST part in Australia. Is that correct?
Amazon's a little bit different, and I haven't covered off on Amazon, so I would have to have a look at their agreement, because to be frank, I haven't looked at Amazon agreement in about 5 years. So we'd have to get back to you on that one. But I would encourage you to download your agreement and speak with your accountant about it, because that will clearly tell you who's responsible for the GST.
Awesome. Thank you. In the Apple GST example, the Australian rev share is $14. How is this figure derived?
So that's essentially 70% of the Australian sales net of the GST figure. So it was just to show that you're getting 70% of Australian sales and you're getting 70% effectively of worldwide sales.
Sweet. All the maths was in the slides. If you want, I'll keep the Slido up a bit longer after this session, so you can put your emails in, and I'll set up a poll. Anyone that wants the slides like Amy offered, we can send them out to you. Oh, I just got lots of thumbs up in the crowd.
No worries. It's a lot of information to take in. I absolutely understand that. So hopefully the slides will be a little bit more helpful to refer to when it comes.
Amazing. And then the last one. This was a really great talk. It's great to see more business resources based in Australia targeted for devs. Not really a question, but thanks. Thank you, Amy.
We certainly appreciate that. Look, we really enjoy working with game dev companies here. We are based in Melbourne, but we do have clients everywhere, and these days over Zoom, it's fantastic to be able to do that. So yeah, we really enjoy working in the game dev space, because you guys are always doing something interesting and it's always something different, so we love it.
I think I saw you going to GCAP this year as well?
Absolutely, yep. So we'll be representing at GCAP. We are sponsoring the event as well. So I'll be doing another talk there on funding. So if anyone is in Melbourne for International Games Week, feel free to pop on down or say hello.
Yeah. Maybe we might meet in person there as well. That'd be great.
We haven't met in person yet, so that might be nice.
All right. Thank you so much, Amy. Everyone that's joining us, thanks for joining in on another session. We'll be back in... Oh, unless there's any more questions come through. No? Yeah, cool. We'll be back in just under an hour for Ivan Ertloff, executive producer at Playside, to talk about the role of production. We'll see you there.